Okay, so students, you watch my previous video. I have started with this sum. Okay, so what I was discussing about preference shares and equity shares. So in internal reconstruction, first entry always you have to pass of the sacrifices which are made by the shareholder. First shareholder will sacrifice. So in sequence of journal entry, first you have to pass the entry of share capital, sacrifices made by the share capital. Okay, now let us see. Now see, preference share face value is reduced from 100, it has become 50. Now this 100 rupees face value is cancelled. You have to cancel it off. So debit it. Share capital is a liability, right? So when you cancel it off, liability has a credit balance. So when you cancel it, it becomes debit. Okay. So preference share capital. So they have not given you any name. Huh? Why cancel? Because see na, new face value na. So we are assuming that old share is gone, a new share. It is like a issue of new share. Actually, it is not an issue of new share. We are reducing face value. But when you treat in the accounting entries, the entry will be like a issue of new share. Okay. So preference share capital account debit. With the old face value, you have to debit it. Old face value was 100. Now it is gone. 2. Preference share capital account credit with the new face value. It is like issuing a new share. New face value is 50. Now, capital is reduced by 50 rupees. Okay. Face value and paid up value both are reduced by 50 rupees. So, liability is reduced. See, capital is a liability. So, capital is reduced by 50 rupees. See, earlier it was 100. Now it has become 50. So, liability reduced means what? Profit. Where it will go? Capital reduction account credit. Okay. So, to capital reduction account credit. So, how much amount? The difference 150. So, what is the difference? The amount of reduction, that amount we have to send to capital reduction. 50 rupee ka reduction. So, that is a profit. Are you getting it, students? Okay. So, now just multiply it by number of preference shares. What is the number of preference shares? In your textbook, you check in your liability side. 4 lakh rupees ka preference share na divided by face value. So 4 lakh divided by 100 is how much? 4,000, right? 4 lakh divided by 100 is 4,000. Number of share will remain same. Don't get confused. Number of share are not changing here. Only face value has changed. So how many number of share were there old earlier? That many number of share will be now. So 4 lakh capital, 4 lakh rupees, no? Preference share capital divided by 100. That will be 4,000. So multiply 4,000 into 100 will be 4 lakh. 4,000 into 50 will be 2 lakhs. Are you getting it, students? 4,000 into 50 will be 2 lakhs. I hope you are clear. Okay. So what narration you are going to write over here? Being 10% preference shares of rupees 100 each reduced to rupees 50. That's it. I hope this entry is clear to all of you. Okay. Now next entry. Okay, sacrifice made by the equity share capital. Okay, same entry for equity share, also same entry. 10 rupees face value will be cancelled and a new face value will be issued of 2 rupees. Okay, so equity share capital account debit. Which 10 rupees by 10 rupees. 2. Equity share capital account credit. A new capital will be of how much face value? 2 rupees. Okay. Now tell me, capital is reduced, liability is reducing, profit where it will go, capital reduction account credit. How much reduction? From 10 it became 2, 8 rupees ka reduction. So 8 rupees where it will go, capital reduction credit, to capital reduction account credit. See student, you must understand the entry. Don't by heart the entry. Understand the logic behind the entry. By 8 rupees. Okay. Just multiply by number of equity shares. Yes, very good boy. So he is correct. You can write like that also. Okay. Because see, old share old face value, new share new face value. So you can write like that also. Old equity share capital of 10 rupees face value debit to new equity, like that also you can write. Okay, no problem. Okay, they will give you marks. Now, how much is the number of equity share? See, number of equity share has not changed. Go to your balance sheet liability, equity share of 10 each, 10 lakh rupees. So 10 lakh rupees divided by face value, 10 rupees. So how much? Yes, 1 lakh rupees. So 1 lakh into 10 is 10 lakh rupees. 1 lakh into 2 is 2 lakh rupees. 1 lakh into 8 is 8 lakh rupees. Is that clear, students? Being equity shares of rupees 10 reduced to rupees 2. Understand? Are you getting it? Okay. So now share capital sacrifices are done. Yes. Dear, see, always remember, you have to first take the paid up value and face value, what is reducing, that you have to see, that you have to take first, and then once that you find out what is reducing, that once you find out, okay, then you have to take the number of shares. See, I am telling you one thing. First you have to understand reduced to and reduced by. This difference you must understand first. Okay. Now here what is happening? Both face value is also reducing, paid up value is also reducing, right? Okay. So always remember, whenever face value is reducing, okay, and paid up value both are reducing, no, what you have to do? You have to cancel the old capital and you have to issue the new capital. Okay. And what you have to take? How much was old? That amount you have to take. Old was how much? 100 rupees. How much became new? 50 rupees. That amount you have to take. Suppose student, here suppose they would have said preference share capital is reduced to 50 rupees. That's it. And they would have not said fully. Huh? Where? Here? No. See in your textbook liability side, see. 10 lakh rupees divided by 10 rupees. Understood? Are you getting it? So that was your doubt. Okay, very good. Okay, so can we move further? Okay, now see, now turn your page. Preference dividend are in arrears, 3/4 to be waived, and this we will do later. Okay, now we will pay off the liabilities first. Okay, preference dividend ka whatever is there we will see further, how much we have to pay them. C, let's come to C. We will make payment to debenture holders, okay, creditors, loans and all that we will see, bank overdraft and all. See, come to the C point. Okay, the debenture holders, pay attention now, this is a very important, here you can stuck. The debenture holders to take over plant and machinery at 6,50,000 rupees in part satisfaction of their claim, the remaining claim should be converted into 14% debenture. Now students, Pay attention carefully. Pay attention what I am doing now. See. Go to your liability side of your balance sheet and tell me how much is the debentures. 12% debenture. How much is the claim of that 12% debentures? Yes, answer me. How much is the claim of that 12% debentures? Chris? How much is the value of 12% debentures? You have to answer, 7,50,000. So we are company. So we company are supposed to pay debenture holder how much? Pay attention, easy it is, but you have to pay attention, 7,50,000. We are company, assume that we are company. Okay. So what we did, we had a plant and machinery. Now see, we don't have money, we are a loss making company. So these debenture holders came to us, they told us, please pay us our 7,50,000 ka claim. Okay, now these are outsiders, this is a loan, we have to pay, we can't say them no. Okay, so what we told them, we didn't have cash. So what we told them, in asset side, go to asset side student, we had a plant and machinery of 6 lakh. Can you see in asset side, we have a plant and machinery of 6 lakh. Okay, so what we told them, you take our plant and machinery, we are giving you plant and machinery, you take our plant and machinery, okay, and you sell it off, okay, and whatever money you will get. Now see, claim is 7,50,000, we have to pay them, and that plant and machinery is of how much? 6,50,000. Correct? Sorry, plant and machinery is of 6 lakh. So we told them, in part satisfaction of this claim, you take our plant and machinery, remaining whatever extra we have to pay, we will give you new debentures. So they agreed, those debenture holders agreed. So on the day when they took over a plant and machinery, that day the market value of that same plant and machinery of 6 lakh was how much? 6,50,000. So in part satisfaction of their claim, the debenture holder took over plant and machinery for how much? For rupees 6,50,000. That 6 lakh ka plant and machinery, its market value has become 6,50,000. So student, out of 7,50,000 of their claim, we paid them 6,50,000 in the form of plant and machinery. So how much is the remaining claim? Tell me. 7,50,000 minus 6,50,000, we are giving them the plant. So how much is the remaining claim? Very good, 1 lakh. Okay. We told them, this extra claim that we have to pay you, we will give you new debentures. We will convert this 1 lakh rupees into new debentures of 14% debentures we will give you for this. For this 1 lakh rupees ka claim, balance claim. So they agreed. They said, okay, no problem. Okay. Now students, the plant and machinery book value was how much? 6 lakh. And debenture holder took over plant and machinery for how much? 6,50,000. So plant and machinery ka value increased by how much? 50,000. This 50,000 will go to capital reduction account credit, and plant and machinery account will be credited by how much? 6 lakh rupees. Plant and machinery account will be credited by how much? 6 lakh rupees. Okay. So we will settle their claims of debenture holders. Okay. So now we are paying them off. We are settling their claim. So debenture is a liability. Liability is credit. We are going to pay it. So make it debit. Cancel it off. So 12%, pay attention students. Chris, pay attention. 12% debentures account debit. Okay. How much? 7,50,000. 2. Now what we are giving them? Plant and machinery. Now students, here in plant and machinery, don't write the market value, write the book value. Book value of plant and machinery is how much? 6 lakh. Now you will say, Then sir, they took the plant and machinery for 6 lakh 50. So what to do of this 50? I told you na, 50,000 you will transfer where? Capital reduction credit. Okay. And for remaining claim of 1 lakh, we are issuing them 14% debentures. And this 50,000 extra increase in the value of plant and machinery we will transfer to, I told you, capital reduction account. Just check whether the video is on. Okay. Being 12% debentures settled. Okay, 12% debentures settled. And increase in the value of plant and machinery transferred to capital reduction account, that we have done. 50,000 we transferred to capital reduction account. Are you clear till here, students? Any doubt in this entry you can ask me. Just look at this entry. All of you are clear? Okay. Plant and machinery, don't write 6 lakh 50. 50,000 you have to transfer where? That increase you have to transfer to the capital reduction account. Clear? Yes or no? Okay. Now next D. Let us come to D. Creditors agreed to reduce their claim by 20,000 rupees. Bills payable to be paid immediately. Okay. So creditors, they agreed to reduce their claim by 20,000. Okay. Now creditors is a liability. Liability is credit. So now they are reducing by 20,000. So you have to make it debit. By how much amount? 20,000. Okay. Creditors account debit to capital reduction account credit. Being reduction in claim of creditors. Write a narration short, okay? And further, what they are saying? Bills payable to be paid immediately. So bills payable is a liability. So liability, when we pay, what is the entry for payment of liability? Capital reduction account debit to bank. Okay. Any liability. Entry for payment of liability in internal reconstruction is capital reduction account debit to bank account. Okay. So bills payable was how much? Go to your balance sheet liability and check. 35,000. Okay. So 35,000 paid. Being bills payable paid. Pay attention on the camera. Huh? Sit there only. Okay. Next entry will be what? Just check it. E. Goodwill, patents and share issue, that right of part we will do later. F also we will do later. Revaluation of asset. Let us come to G. What they have said? A secured loan of rupees 1,50,000 at 12% per annum is obtained by mortgaging land and building for repayment of bank overdraft. Okay. So students, if you see in the liability, there is a bank overdraft. What they are saying, what company is saying, to repay that bank overdraft, company is taking a new loan. Company is taking a secured loan. Okay, so company has taken a secured loan of 1,50,000. Okay, so this entry we have to pass. Loan taken against the security of land and building. So same, loan is taken means cash is coming in. So bank account debit to secured loan. to 12% secured loan. Bank account debit to 12% secured loan. $1,50,000. Okay. Being loan taken against security of land and building. Okay. Next is yes, now you can pass other entries. Okay. Come to E. E was pending, no? E, F is pending. So we will do that. What is point number E? Goodwill, patents, profit and loss and share issue expenses are to be written off, cancel off. Okay. So goodwill, patents, share issue expenses, they are assets, debit balance. So write off. So how to write it off, cancel it off? We have to make it credit. Okay. So the entry will be capital reduction account debit.
Whenever asset is getting debited, then capital reduction will be debit.
See here, I am writing it again. Asset has which balance? Debit balance. Okay. When asset increases, make it debit. When asset decreases, make it credit. Okay. Understood what you were asking?
Whenever asset is getting debited, then capital reduction should be debited.
When asset is getting debited, it depends upon the entry. What entry you are passing?
Asset is has debit balance. So what you said, you have to cancel it. So you have to make it credit.
Yes.
So the whatever asset will come, that will come as a credit.
Yes. And capital reduction will be debit. Understood? Capital reduction account debit 2. Write it off. Goodwill account 2. What else is there? Patents account. Patent is there. Check. Yes, patent is also there. Patent is an intangible asset. Huh? So patent also you have to write off. All intangible assets, goodwill, patents, copyright, trademark, there you have to cancel them off. Goodwill, patents to patents account 2. Profit and loss account debit balance 2. Share issue expenses. Okay. Now you first write down these values of the assets. Okay. So go to your asset side. Goodwill is 25,000. Patent is 15,000. Profit and loss is 8,20,000. Students, do the total of this and tell me how much I should write the total amount on the debit side. Share issue expenses 45. Do the total of this. So I will get the debit amount. Fast. Come on.
That is 8,20,000, no?
Yes.
9,05,000.
9,05,000. Okay. So being intangible assets and fictitious assets and losses written off. Okay. Next is F. Point number F. The following assets are to be revalued. Just check the camera as under. So we have to revalue the assets. Furniture, these are the new values. Okay. Furniture's new value is 25,000. What was the old value of furniture? See in the asset side, 35,000. Right? Okay. Camera is on, na? What was the old value of furniture? 35,000, correct? New value is 25,000. Stock in trade new value is 68,000. Stock in trade old value was 80,000. Okay. So new value is 68, old value was 80. So stock in trade has also reduced. Furniture's new value is 25, old value was 35. So furniture value has also reduced. Okay. Then land and building new value is 5,80,000 and old value was 6,50,000. So land and building value has also reduced. Sundry debtors new value is 80,000 and old value was 90. So sundry debtor has also reduced. So all the assets value has reduced. So asset reduce, asset has a debit balance. When asset reduces, we have to make it credit. Okay. So make all the assets credit. And capital reduction, you have to make it debit. So capital reduction account debit. 2. Furniture account. 2. Stock in trade account. 2. Land and building account. 2. Now all are reducing if you check. Okay. All the values are reduced. That's why you have to make it credit all assets to debtors. Now what you do here, you must write the differences. So furniture old value was how much? 35. Old value was 35. New value became 25. So difference is how much? Students, 35 minus 25 is how much? Yes, you have to answer 10,000. Stock old value was how much? Stock old value was how much? 80,000. And new value became how much? Hey, keep the phone up. What you are doing? New value became how much of stock? 68,000. Na? So what is the difference? 80,000 minus 68,000 is 12,000. Land and building, how much was the old value? Yes, 6,50,000. Old value 6,50,000. And what is the new value of land and building? 5,80,000. So tell me the difference. 6,50,000 minus 5,80,000 is how much? Yes, 70,000. Then tell me debtor. What was the old value of debtor? 90,000. Yes or no? What is the new value of the debtors? 80,000. What is the difference? Yes. Now add all the amount and tell me the debit side amount. 70 plus 180, 92. 1,02,000. Am I right?